that could be one of the bear cases. That's one of the things
Absolutely.
that monetary deflation, where the velocity of money drops quicker than the supply of money because of the expected, what there's, some experts expecting now 6 rate hikes. So velocity of money dropping quicker than the supply of money, rate hikes, less lending, less monetary inflation. Maybe we go into disinflation with pockets of deflation. What is that one thing that you wanted to talk about?
Yeah, absolutely. That is the bear case. If they're really, truly gonna hike 6 times, and I say it with, I'll say why I'm saying it with such incredulity in saying it that way. But yeah, if they're really going to go embark on this course, then a lot of companies will fail and go bankrupt, and which means default to creditors, which means write-downs of trillions of dollars in assets, huge numbers of layoffs, all the wage earners that would otherwise be buying silver, unable to buy silver, and if they wanted to, deflation across the board. And I'm not necessarily particularly bearish on gold in that scenario, although that's not necessarily a very bullish case for gold. But for silver, I think that's quite bearish. And you could see a big drop in the silver price. But there's a giant asterisk on this whole scenario. And that is the Fed really going to do that? Now, I don't claim to have any particular ability to predict what a politician is going to do. And that's what the Fed is, right? The Fed is the politicization of what would otherwise be 300 million people making economic decisions, which is to lend and save or, hoard and withdraw their gold coin if they didn't like the deal, and take that over with a central planning agency run by a politician. Jay Powell is a politician.
Of course.
He's good at politicking. He's good at saying all the things that people want to hear. Whether any of them are true, whether he even knows what he's talking about, doesn't matter. It's not even a qualification for the job. He's good at getting the president to appoint him, presidents of 2 different parties, I might add, and senates of 2 different parties' composition to ratify his position. That's what he's good at. Does he know anything about monetary policy? Well, different story. So in 2015, which is the last time that we were at this juncture, everyone talking about inflation, everyone saying the Fed has to hike rates, and the Fed promising with Janet Yellen. In fact, the very last days of Bernanke was starting to talk that talk. Janet Yellen took over, and she's promising big rate hikes. So exactly the same, obviously with some differences. History doesn't repeat, but it rhymes. The Fed in 2015 saying, we promise we're going to hike the beep out of interest rates. And I said at that time, and I'll say it now even more forcefully than I said it then, if the Fed is serious about hiking rates, they will find they cannot hike very far, and they will not be able to hold that hiked rate very long. Why? Because the demand for credit is soft, except on a downtick in the interest rate. And when interest rates are going up, what you find is marginal demand drying up. And to have a sustainable rate hike cycle, as we did 1947 to 1981, every time the interest rate was going up, corporations were more aggressively borrowing more. And every time consumer prices were going up, you get more and more buying, which is the opposite of where we are today. So I don't think they'll be able to get very far into it. However, that could certainly take out, the year 2022 could be occupied with temporary abortive attempt to hike rates. And if so, then that's a bearish case for silver, quite bearish. If, on the other hand, the Fed abandons this, for lack of a better word, I guess I'll use it, fantasy or delusion, that they can hike. And you have to kind of wonder inside the Fed, how many of them kind of realize that they're trapped and that it's a falling interest rate structure and it's been falling for 40 years and the drivers are still there and all that. Do they abandon it and say, all that stuff we said about hiking rates, like a bad Arnold Schwarzenegger movie. Remember when I said, Solid, that I would hike interest rates? I lied. If they come to the market and say that with their tail between their legs or with whatever posture that they might adopt, then, a couple of things happen. One, okay, happy days are here again. Stocks begin to rally. Real estate rallies. Bond prices, obviously, inverse of interest rates. Assets going up again. Bitcoin probably skyrockets again. Gold and silver going up again in dollar terms. But then the other thing that starts to happen is this, slow erosion of credibility in the Fed. And which I think happens at the margin. And at the margin, there are people that start to say, those beep idiots, I don't want to hold their currency anymore. And then they say, okay, I want my personal holdings to be dollars. And then that's creates a step function up in the price of gold. So look at after 2008, what the Fed did, what seemed like madness at the time, and the gold price had a step function up. Huge blip up, obviously, up to 2011, but in the long bear market post 2011, we never got below what had been previously the high, $1,000 plus, right? So there's this step function up post 2020 and COVID. The Fed and the fiscal authorities took actions so massive that they make the 2009 stuff, which seemed crazy at the time, look like a little blip of a couple of pixels at the bottom of the graph relative to 2020, another step function up as more people come to precious metals. And I think it's a one-way, valve, right? As people discover gold and silver as the antidote to this, I don't think they go back. And so the dollar keeps, stepping down. And if the Fed comes back and says, we're not going to hike rates, then I think you get more and more of that. So not only is it bullish because the Fed is easing credit, but it's also bullish for gold because the Fed is essentially saying the dollar is a shit coin. And people can see that.
Okay, so that's the first possible bear scenario that I could come up with, deflation. So I'm happy we targeted it. The other one that I wrote down was sentiment, because you said, and you compared it to the last time around, but we seem to be at different times, and those are the four most dangerous words, right? This time is different. But is it though? Like, is that's what I want to ask you. Maybe I'm thinking you might have a good way of measuring that, because you sell precious metals, basically. I mean, services related to them. And so I'm thinking you might have gathered some data as to who buys, like on which specific days or times, how much of it, and just all that data that you have. So have you maybe noticed a trend that's maybe suggesting you that investors no longer believe in the safe haven properties of gold and silver? Is that, could you even measure it?
So I can say that there was a step up in the wake of COVID, right? So leading up to COVID, you start to have the threat of credit collapse and the price, again, particularly silver, getting weak. Then they announced the CARES Act and everything the Fed was doing at that time, and then suddenly aggressive. First of all, coming into our program, it was a big shot in the arm for our business, but across the industry, right? That for the first time in years, you see the premia on like silver eagles and silver maples skyrocketing. For the longest time, you could barely give eagles away at spot. Well, gold eagles, you're giving them away at spot before that. Silver, there's a premium, but a historic low. Retail just didn't want eagles. And I think eagles are a good proxy for retail demand. All of a sudden, you had, and this is a year before Wall Street Silver, said short squeeze or anything like that. All of a sudden, you just had retail, coming in with huge demand. And since the manufacturing capacity for coin blanks is finite and inelastic, then you drive the premiums up to 30% premium over spot or something like that. And that's been up and down since then, but it's at a much higher, it's again a step function up of anything that existed prior to March of 2020. So I think there is absolutely a greater interest in precious metals. I do not think that. So it's interesting you say, people giving up on precious metals or whatever. The mainstream certainly has, and something I like to talk about is on CNBC. They have whatever people that are talking on the main thing, and then there are graphs on the main screen. Then there's this bar with tickers going by. And then in the lower right-hand corner of the screen, you have this little thing with 3 or 4 prices, and it cycles through the Dow and S&P, the Treasury bond, the FTSE 100 in the UK, the DAX in Germany. And then they used to have gold in that rotation every cycle through. And now gold seems to be more like once every 5 cycles. Mm. And Bitcoin shares some now, and but there's other things. They've completely de-emphasized gold. So we're almost in the same place with gold as we were, let's call it 2002 to 2008, a stealth bull market that nobody knows about and nobody likes, at least in the mainstream. Within the space, I think it's hot now, and everything sort of post-COVID, it's a hot space. But outside of the space, in the mainstream, they just sneer at it and just scoff at it and don't take it seriously. And then of the people who think, okay, what's the anti-dollar trade? A lot of people would say Bitcoin. But, regardless of who's maybe the most vocal on Twitter, there certainly is a lot of action of buying. And that's why the price of gold is sitting here within a hair's breadth of its all-time high again. Unloved and neglected though it may be.
And that's really why I asked you that question. This second bear thesis for the precious metals sentiment was really a segue into the third one that I want to discuss, which is digital assets. And not that anybody cares or should care, but I'm not a fan of digital assets. I've said why in my past, and my reasons come close to yours, Keith. You've talked about that on Palisades, very good show, called Gold 1, Bitcoin 0. That's what Tom called it. But it does seem to me that, like you said, an increased number of people around me are sort of enjoying the ease of deploying capital into something that is being sold to them as a new gold or the better silver. And I think it might be something psychological where you have some money, you want to deploy them, but maybe it's hard to get precious metals. The premiums are high. You don't know who to buy from. You don't want to keep it in a vault. You don't know what to do with it. But Bitcoin, you just buy it through an app on your phone and you forget about it. There's an ease of purchase. You don't have to store it. And then you feel as if you're doing something purposeful. And everybody on your feed on Twitter or whatever is just confirming your bias all the time. So it just feels nice. And a lot of people invest to be right and to feel nice, not really to make money or to predict wealth. So don't you see that as a potential long-term downward pressure on precious metals, like just the sheer feeling of it? Am I making any sense?
Yeah, no, I get what you're saying, and I think the thrust of your question is, leaving aside my views of what Bitcoin is or isn't, you're sort of leaving those to the side. Is Bitcoin mania bearish for gold and silver? And I think the answer is no. I'm going to talk about two ways to think about this. There's not two different reasons, it's probably the same reason. But the first is something that I call the famous buyer fallacy, but it applies here to Bitcoin in a slightly different way. So famous buyer fallacy is, a couple of months ago, everyone was talking about that the central bank in Ireland bought a couple of tons of gold, and that therefore that proves that gold's going to go up. And I call it the famous buyer fallacy because, okay, you have one famous buyer, but you have 10,000 not famous sellers who all sold their gold to the Bank of Ireland. And which side do you think is right, and why? And my analysis is actually there's no information content there at all. One side may be right, the other side may not be right, but which one is famous and which one is right have no particular correlation. There's no information content there. And it's kind of the same thing here. For everybody who's buying Bitcoin, there's someone who's selling. And if Bitcoin is going up, the person who's selling is selling for more dollars than he put in. He's looking for the next capital asset to buy. And so I say it sort of looks like two reasons, but actually it's one reason, which is for every Bitcoin buyer, there's a seller. And for every seller, that's a bid on another asset. And what do you do if you bought Bitcoin at 10,000 and you sold it at 68,000? We Monetary Metals know because we talked to them. Some of them buy gold. We've definitely had people coming into our program who bought gold with some of their Bitcoin winnings. But whether they buy gold or whether they buy real estate or whatever, there's somebody that's you're not focused on. It's not the famous, it's not everybody in your Twitter feed cheering Bitcoin going up and saying how much they're buying. There's somebody on the other side who's selling, and then that seller has all that cash to do something with. And so assets, in that sense, and there's some sort of a more broader market price theory component to this. Assets don't compete with each other for price. One asset going up doesn't mean another asset going down. And look at the stock market. And we talked about the S&P 500. There's 500 stocks that are lumped together in one single thing because we kind of expect a directionality to the whole sector. It's not like if people are buying Google, that means they're selling Apple necessarily to raise the cash to buy Google. Every day somebody's buying something. And then, in fact, it could be the same two people that are trading back and forth. I buy Apple from you, you take the proceeds and buy Google. Tomorrow, I sell Apple to you at a higher price and take the proceeds and buy Google, then you sell, So, two people can be chasing the price up or down, and it depends on whether the buyer has urgency and is taking the seller's offer price, or whether the seller has urgency and is hitting the buyer's bid. So obviously, the entire stock market's been going up with some corrections, but basically been going up since 2009. And there's no reason why the price of gold and the price of Bitcoin couldn't be going up to name whatever arbitrary number that one might choose to name.
I like, you're very sharp, and I like your first principle thinkings where you go back to saying for every transaction there's a buyer and there's a seller. Like there's no capital inflow without capital outflow, right? Does not happen. So that's very, very good.
So there's the debunking of the whole money on the sidelines fallacy right there in one nutshell.
Mm-hmm. I like that. But one last question, because I know I'm probably losing your time and you have more important things to get to. Well, it's not a question. It's actually the fourth possible bear case for precious metals. A crash. What happens to the people who are maybe already tired of holding silver and then they see all the rest crash? Would it maybe, especially holding silver and gold, without them really moving to the upside for a year, especially if they're holding it in equities who have gone down? Actually, some people have been holding it for over a decade. I'd see these comments on my videos like, "It's just another guy saying that precious metals are going to go up. I've been holding for decades. They have not gone up." So what happens if they're tired? What are the potential dangers for precious metals during a market crash? What do you think happens to them, Keith?
Yeah, I mean, absolutely. If people buy precious metals based on a bull case, and this gets back to earlier, why some of my reasons for why I don't necessarily want to tout these theories. They buy based on a bull case, which is simply a false theory. But they bought based on it. They believed it. Mm-hmm. Eventually, sooner or later, they get sick and tired of it. And one of the things we talk a lot about is storage costs. I mean, unless you want to take the risk of having it at home invasion, flood, whatever, you're paying somebody to vault it, and you're paying 75 basis points, 0.75% per year or something like that to store it. Well, they can come to Monetary Metals and then no more have storage fees, and instead they're getting paid. So that might make some of them a lot happier, because I think the storage bill gets old after 10 years of no price action. But you're right, if somebody bought, especially if they bought on the wrong reason, they're going to be a seller at some point. It's almost inevitable. Mm-hmm. And now the thing that makes the monetary metals, the monetary metals and not the expensive industrial ingredient metals like rhodium, platinum, palladium, is that they're money and people hold them as money demand. And if you think about money, and this is one of my big arguments with the Bitcoin people on Twitter, money is the thing that's supposed to be stable. I mean, if you're buying, something, on the one hand, you're calling it money. On the other hand, you're predicting to make big, giant gains. Well, I would suggest those are mutually exclusive. The gain should be measured in money terms, but you're making a gain on something that's not money. There is an enormous, deep global market for people who want to hold the metals, not with any particular expectation of them going up. So an example I wrote about at the time, I want to say this was 2013, 2014. I don't remember when this happened. You remember when the Cyprus banking system collapsed? So Cyprus is a little island, two countries. I think Turkey controls part of it and Greece controls the other part. And the banking system was overexposed to Greece and Russia and some other things that crashed at that time. And so they had a bank holiday and people could only get whatever it was, €100 a day out of their bank. Mm-hmm. Basically, they're screwed. A lot of companies closed on the island. So, if you were living there and you suddenly said, well, I've lost my job, I need to get to the mainland where I can get a job, you might have found it hard to pay somebody to take you on a boat to the mainland because you couldn't get the euros out of your bank account. If you had gold, there would not have been a problem.
Mm-hmm.
You just pay the right amount of gold, and gold would be accepted without question in a situation like that. So my point was, at the time, I actually interviewed a gold bullion dealer in Nicosia, the capital of Cyprus, and talked to him about this. The idea of owning gold in that situation wasn't that its price was going to go up in euro terms. And in fact, if you look at the graph at that time, the price wasn't rising. However, gold was safe, and the euros or bank liability weren't. And so, there is a global market with a depth of billions of people that want to hold precious metals, not necessarily thinking that their price will rise, but thinking that they're safe from, credit default risk. The recent action by the Trudeau government in Canada, gives a different kind of safety that people didn't necessarily have to think too much about. And suddenly now they do, which is, what if the government decides they don't like your political views and then orders your bank to freeze your account? So if you had some, silver and gold in your pocket, you're liquid.
Mm-hmm.
If you have to hire an attorney to deal with a problem, you can. If you have to buy passage and get the hell out of there. I know somebody whose family was a Hungarian, and they escaped Hungary just as the Soviet tanks were rolling in 1956. And so they got to the border with Austria, and there was a little guard platoon or whatever that intercepted them. And basically, Dad took off his gold watch, gave the gold watch to the, sergeant or whatever of this little group of guards. And it wouldn't have worked with a thumb drive with a USB, a USB drive with a Bitcoin key on it. It wouldn't have worked with paper currency, but it was gold. And the guard could tell that it was gold. Gold has a unique look and a unique weight and everything else. The guard said, okay, my men are going to patrol, and he pointed directly into Hungary for 15 minutes, and then we'll be back. Be across the border by then, because if we come back and see you, you're dead. Go, run. Mm-hmm. And then the guards turn their backs on this family and let them run across the border to Austria because gold.
Mm-hmm.
So, anyways, there's a lot of people who think about stuff like this. And, even if one person is saying, damn it, silver didn't go up as much as I had hoped, or didn't go up at all, or went up and down, and then I'm out, for every person like that, there's another person who says, I'll buy it because it's safety.
I have a very comparable story because I lived through the hyperinflation of Bulgaria in 1996. That's where I was born, and I was 1 year old at the time. But my mom and dad, that's how they got by. I told the story recently, but that's how they got by. They had jewelry. That's how the culture is. But they had silver and gold jewelry. At first, they'd start selling. Not a lot of it. We've never been wealthy or anything like that. But like they have some small silver rings and stuff like that. And that's the only thing that the pawn shop would accept at the time, because the currency, it used to cost you like, I think something like 400 left, which is the currency, to buy $1. And then it went up in like a couple of months. It went up to costing you like 17 or 1600 to buy one $1. Banks were limited. You cannot withdraw your money, but even the very little money that you had was devalued. And you had a hyperinflation at the same time as you had a banking crisis. So a complete mess. My mom was terrified. I was 1 year old at the time. My brother was 10 years old at the time. My mom was a very young mom. So she was like 27, very young. I'm 27 right now. I feel like a child. And so that's how they got by, selling gold and silver, very little of it that they had, but they could feed their kids. We weren't homeless. We got a roof above our head. They could pay rent. They could feed their kids. So she's also told me a story that she had a small gold necklace that she gave to the landlady to stay another month. And in that month, she found a job. And that's literally what saved us from being homeless and maybe never finding that job. So that's a very comparable story. That's why I'm for actually holding some precious metals, especially in that form of jewelry, because that's a very attractive thing to a lot of people. That's I guess a different story. But the question that I did want to ask that I wrote down is that, okay, even that being the case, isn't the majority of the money that's invested in gold and silver, isn't it in countries where people don't really believe that? And isn't that still going to cause a selling spiral, basically? What do you think about that?
Yeah, obviously that's a distinct possibility. I think at the moment, the emphasis is on the other side of things, which is the Fed is getting crazier in what it's doing. The Fed, I think, is about to, if somebody put a gun to my head and said, bet which side is the Fed going to persist with 7 rate hikes or whatever it is that they're saying versus is the Fed going to back down? If I had to pick one at gunpoint, I would say the Fed's going to back down. Or maybe they do 1 or 2 hikes, realize how bad things are getting, and then reverse. And I think right now, if you had to say, okay, on the one hand, people would get sick of it and sell their precious metals. On the other hand, people looking at the dollar and saying this is less safe than it was, my money would be on the latter as a general macro thesis. Now, does that mean, $2,100 to $2,200 gold this year? That's my call. Or did I say 22 to 2,300 in the report? Anyways, a bit of a price rise. Does that necessarily mean that this year? Well, a lot of things can happen, but in general, I see a macro backdrop conducive to people wanting to buy more gold, not people turning around and wanting to sell it. So I think the bear market dynamics of 2012 to whatever 2017 or 2018, I think those dynamics are done, and we're in a different era, and probably a lot less leverage, in the gold market and the silver market right now than there was. Mm-hmm. Let's say in 2008 when that crisis hit. I think there was more leverage in the market.
Fair point, because I made the point of isn't trust in digital assets increasing, but at the same time, isn't trust in the government decreasing? I'd guess it is. And in the government's ability to keep financial stability and liquidity and all that, I would guess it's decreasing based on my gut feeling of what I'm seeing and hearing around me, especially with all these politics happening right now. So, yeah, Keith.
Wait till the Fed reverses its course on its. They've made a big show of telecasting rate hikes. Mm-hmm. When they reverse that, what does that do to trust in what they say they're going to do?